Ladies and gentlemen, it's a great pleasure to be in Indonesia. I must tell you that I have the privilege of traveling all around the world and have been to many places, but I always find this fantastic bundle of energy in Indonesia that always reminds me that there is great promise in your great land. And so it's a great pleasure for myself and my colleagues to be here in Jakarta once again. It's an honor to share the program with His Excellency Mr. Haddad. I think you can all take great pride in the leadership that he and his colleagues at the Bank of Indonesia are providing, because your 4.5% growth last year is among the world's best. So congratulations to you on your fine leadership. I also feel very comfortable being on the platform with you because I spent 25 years in the Federal Reserve System in the United States, and there is a secret code of honor between central bankers. So I'm very pleased to once again shake the hand of a central banker. It is also an honor for me to be with you today to share what we believe can be a great new source of strength and growth for our nation's economy, for the global economy. This is a time, as Mr. Haddad mentioned, when the G20 leaders, when the global leaders are looking for new sources of growth after the great dark period we have just been through. We believe that the GCEL initiative is one whose time has come, because we believe that we have a program that can build stronger markets, can build stronger trade, can build stronger profits, and all of these things focused on what we now know has to be the source of growth in the future. And that, my friends, is innovation. We have just passed through a time when governments around the world have tried to stimulate all the parts of the global economy through government programs, through fiscal stimulus. And I think Mr. Haddad and I would agree that this can only be a short-term solution at best. And that what we truly need in the global economy today is a new sustained engine of growth that is built on innovation. And that is why we have come to Indonesia. I would like to really do three things with you today. The first is to put into global context why we have come forward with the GCEL initiative today. And that is why the global crisis is precisely why we have come forward. Secondly, I want to try to explain what the GCEL HumaWealth program is all about and give you a taste of its key features. And third, I want to very briefly describe how Indonesia can participate in this major global initiative. Let's begin with why GCEL now. Well, as Mr. Haddad mentioned in his comments, we are at a very critical moment in the global economic recovery. We had a 2.2% drop in global GDP last year, and we're expecting modest growth. The current forecast is for modest growth of a little under 3% this year. Of major concern, we had a drop in international trade last year of 12%. That was the biggest drop in 70 years. And as a region here in Asia that has built its economy on trade, that is a concern. And it's very important that we think about how we turn that around. Meanwhile, financial markets remain in turmoil. While I would certainly agree the worst is past, we continue to see financial institutions digesting very large losses, and we also have concerns around the world about sovereign debt. If we could sum up all of that, what I would say is that there are very promising seeds of recovery, probably none more promising than we see here in Indonesia and the ASEAN region, but the debt overhang is something that creates much more than usual uncertainty about the future. We have seen the leaders of the world, and the G20 in particular, look to financial reform and the biggest fiscal stimulus packages ever as a response to this crisis. But as those G20 leaders have come together, and from my perspective that has been a very encouraging thing, but as they have come together, there are three critical questions that remain. Will demand respond and be sustained in its recovery? Will trade resume? And will banks recover? All three I would regard as critical tests of whether the upward trend will continue. We think the world is at a moment when it really wants change. There are concerns ongoing about unemployment, about financial markets, about the drop in trade, about the factories that have closed, not here, but all around the world. And if you sum up what all of the leaders of the world really would like to see happen at this juncture, we think it's a fairly small list of things. A comprehensive and global solution. We all recognize we live in a global economy. This cannot be a solution for any one country. It must be a global solution. It must benefit both the developed world and the developing world. And in spirit, the G20 represents that. It must be founded on innovation, the point I made at the beginning. It must represent both the collective energies of the private sector and the public sector. It must provide economic growth and job creation, and critically, as we speak to the bankers in the room, it must provide financial recovery for the financial institutions. In sum, what we see as a roadmap going forward are a few key things. We need to find ways to spur trade and resist calls for protectionism. We have long learned in the post-war era of the global economy that economies grow when trade grows. And in fact, we should all be very mindful at this time when there are some calls for protectionism around the world. We should all heed the lesson of the Great Depression. And that was recession turned to depression when countries around the world erected new trade barriers. And the chart that you see before you goes back more than 25 years and shows you the very clear correlation between rising trade and rising GDP. We also think that it's crucial, and Mr. Haddad mentioned this when he talked about the challenge of seeing investments being made by the financial sector. It's important those investments be in real economic growth, not in just more debt. The global economy, I would submit, needs investment, not just spending. Country to unlock what it does best in the global economy. And I think we have learned, though there clearly will be additional calls for reform, markets work best when the linkage between lending and economic activity is strong, including central bankers will continue to stress real business growth and expect the financial. So, if we were to sum up where we are and why GCEL has come forward, very simply this. The world needs a way to spur and encourage trade. It needs a way to spur investment in what each region does best in the global economy, and it needs a way. And how will this benefit not only the global economy, but also benefit the Indonesian economy and financial institutions? Simply, what is GCEL? What is the Global Coalition for Efficient Logistics? We are based in Switzerland. We're companies that are part of us. They have a manpower of 2.7 million people, and they service about 6. So it is a very sizable coalition that has come together around this initiative. The global logistics pipeline, the trade that is at the heart of global commerce, much more efficient. And indeed, we are aiming to implement the HumaWealth program that will drive down the cost of trade by about 30% globally. And I'll explain in a moment how the GCEL program will do this. Our HumaWealth program has three key elements, and we view these very much as a package. We could not do what we are about to do with only one of them or two of them. We will end 18 months. Let me describe first the global logistics system. And this is, in effect, growth being driven by innovation. It is precisely the answer to the global financial crisis that we think must be at the heart of any solution. Let me provide an analogy. We all know very well how our airline reservation system works around the world today. We all are accustomed with going to Orbitz or Expedia or Travelocity to book an airline ticket. Well, it wasn't always so. There was a time not too long ago when to fly to Jakarta from Europe required a paper ticket. And you could not get on the airplane unless you had a piece of paper that had your name on it. Well, that all changed when we created an e-airline reservation system. And instead of going from paper tickets, 4 companies figured out how to create a seamless e-reservation system that created the electronic boarding pass. And it also did away with travel agents, who used to be the only people who could call up those old clunky reservation systems and make a reservation. Today, there are 4 systems around the world: Amadeus, WorldSpan, Galileo, and Sabre. Those 4 systems control 100% of the market, and when you go on Expedia, in the background, one of those systems is operating. And it has had a fantastic effect on making the cost of air travel much more efficient, much cheaper to you as consumers. Now, it also did something rather interesting for financial institutions. For financial institutions, it created a whole set of new markets. And in fact, when you go on Expedia and book your airline reservation, how do you pay for it? You swipe your credit card. But you not only buy an airline reservation because a screen pops up and says, which hotel would you like to stay at? You swipe your credit card again. Which rental car would you like to use? You swipe your credit card again. Would you like to see a Broadway play while you're in New York? Or would you like to see Disney World while you're in Florida? Swipe, swipe, swipe. So, through one rather simple but elegant technology, financial institutions saw a dramatic increase in the markets that they serve. Now, think of that as an analogy, and now we go to the logistics industry. Today, the logistics industry globally is essentially where the airline industry was 25 years ago. In fact, when all of the cargo moving around the world that connects all of the global economies, when all of that freight is moving around, 90% of the time, the documents exchange hands in the form of paper, which is right where we were with paper airline tickets. We see an opportunity going forward to do for the global freight industry what WorldSpan and others did for the airline reservation system. And we see a system of tomorrow in which there will be 12 systems, not 4. 12 systems because we imagine a roundtable of 12 major global technology firms that can deliver this system. And those 12 systems will drive down the cost of logistics in exactly the same way that WorldSpan and others drove down the cost of air travel. Now, for the financial institutions in the room, imagine for a moment what happens to your services and your markets with an e-logistics system. Because now you can not only finance the freight, you can finance the inventory, you can do the insurance, you can consolidate the bills, you can do all of that. All of these pop-up screens in the logistics world, just as you have in the airline reservation system. In short, if you compare what was done in the airline industry with what we will be able to do for the global logistics industry, We think this unleashes the greatest innovation in the global logistics world since the advent of the container more than 50 years ago. That's step one. The second key element of the HumaWealth program is a network of companies around the world to deliver this system to shippers and receivers. Let me explain very simply how this works. First of all, we have to recognize that however we would design the global logistics system, at the end of the day, it must meet the demands of private sector companies. What does the private sector want? It wants an optimum value proposition. While it is concerned about the global economy, it wants a value proposition that works for that company. It wants, at the end of the day, and in the best of circumstances, no cost to the end user. It wants this system to be delivered by companies that it trusts. It wants to be able to use its existing systems without having to change them. So non-intrusive integration. And it wants to make sure that no one company, no one part of the world is going to control all of this. If this is a global economy, Indonesian firms would like to make sure that Indonesian companies can participate, just as people in Europe would like to participate, and in the Americas, and in the Middle East, and so on. We believe that for this system to work, there has to be at its core a network of companies that provide access to all of the private sector, that provide access to this core system, the global logistics system. Now let me explain that there are two important ways in which this network is divided. First of all, you'll see that there are 4 regions of the world represented in the 4 corners of this diagram. You have Europe, Asia, Americas, and the Middle East Africa, which is our acronym for MEA. 28 gateways globally, 7 will be in Asia, 7 in Europe, 7 in MEA, 7 in the Americas. These gateways are apportioned to ensure that there are no geopolitical imbalances. Secondly, we will have 7 in Asia, but they will represent 3 critical providers to the logistics industry. If you look at the logistics industry, there are 3 key industries that support it. One is finance, one is insurance, one is technology. We will have 3 gateways in Asia that are finance companies, 3 gateways in Asia that are technology companies, and 1 gateway in Asia that is insurance. So that is the 3-3-1 that you see in each region of the world. Now, those gateway companies all come together to deliver this system, and you might ask, why will they come? Why will they participate in this major global initiative? Well, it's very simple. Where there are profits, companies come. And there will be very significant profit potential for these companies. In particular, financial institutions. Mr. Haddad has already mentioned this number, but I want to re-emphasize it. $5 trillion market opportunity for financial institutions. How? I explained it earlier. All of those credit card swipes. All of those credit card swipes. As firms take advantage of a new suite of financial services. Similarly, insurance institutions, a $400 billion market opportunity. And for the integrated providers, $116 billion. The technology deployers themselves, $177 billion market opportunity. Now, an important element of the design, and this is in fact very much like what goes on in the airline reservation system. There is revenue sharing in that case as well. That revenue sharing, importantly, will provide a mechanism to reinvest and maintain the core system. And absolutely superb world-class core system. And the revenue sharing and is what makes that possible. Now, all of that network will provide services to the private sector. With us, we must also bring the public sector. And, in fact, this is the role for the Global Coalition for Efficiency. It's a place where we can bring together all of the concerns that the globe and public governments have for the deployment of this system. Make sure that the performance is monitored, because this is at the very heart of many of the sovereign concerns that countries have. And they want to make sure that everybody benefits, that it's not just the developed countries who benefit, but that all role, one of monitoring, one of triggering, one of bringing together public concerns, that is a crucial role that GCEL plays, and that is why a nonprofit was an essential element in the design of crucial in achieving the HumaWealth program is rapid global deployment. It does us no good to have a solution that only works in one country or one region. We have designed a very systematic deployment program. We will then set about to trigger this in 4 major projects around the world. These are deployment projects. The first we envision will happen in the MEA region. I will explain in a moment where these are. Second in Europe, third in Asia, and last in the Americas. In each case, there will be a development of the core system and of the soft infrastructure, and an important element of each benchmark will be to look at the efficiency of the logistics system before the introduction of this soft infrastructure, and then compare it with the efficiency after. We had mention of the fact that the World Bank ranks Singapore #1. They are very much part of our initiative because they want to enhance their lead. And a critical element of our benchmark lanes will be to show each region, here's the improvements that you can expect by adopting this system. Now, let me just show you a couple of the geography on the map here. I'll explain in a moment. In the Middle East region, we already have a very strong commitment from the government of Egypt and also from the government of Italy to have a deployment project that will look very closely at the trade in food and agricultural products between the northern Mediterranean countries and Europe. We envision that the project here in Asia will extend from Jakarta to a portion of the Asian economy. We believe that it's the most likely other endpoint is Hong Kong, but we are also looking at Singapore and other opportunities as well. But when you add all of these 4 projects together, and you look at the timeline that we have seen, within 18 months, we believe that we will have true global deployment of this project, and at that point, we are at a commercialization level. Very quickly, let me just identify the benefits that the early adopters of this system will achieve. And in this case, I'm going to show you the EuroMed project, which is one that they have called the New Dimension Green Corridor. It is called Green Corridor because it has to do with food and agricultural products. The EuroMed deployment lane offers, I think, an excellent first-hand look at the kind of benefits this system will have in regional economic development. I suspect that Mr. Haddad and I, if we have more time over lunch, will talk about the challenge of rebalancing the global economy. And within regions, the EuroMed region offers a really good glimpse at that. Very simply, this is the roadmap we see going forward. In every region of the world, companies are making a choice. Do they want to centralize to achieve economies of scale? Do they want to create new operations in other countries? Or do they want to create new plants in total? And do they want to decentralize to another place? Whatever path the business wants to take, they can use the 3 tools that I just described for free. I want to emphasize this point. If you are a shipper in Indonesia, a member of GCEL, and you want to ship your products through the system, there will be no cost to you at all. That's the beauty of this solution. In using these tools, we believe that Indonesian companies can go to a world-class standard very quickly. I won't go into the chart that you see up above, but we had mention of the World Bank's index that measures shipment efficiency. It is that kind of set of scorecard that we will be able to demonstrate that firms and ports and others in the system have been able to improve. And lastly, we believe that those firms, those countries that achieve a new era of operational efficiency, they will attract new investment. They will provide a clear signal to governments where new investments should be made in public investment. When we look at the Euromed region, in the first introduction of this system, we believe that we will be able to lower the cost of trade, which is landed import-export cost. That's LIAEC. In their case, 164 billion euros, while cutting the operating costs of firms involved in this system by 15%. At the same time, we haven't talked much about this benefit of the GCEL initiative, but it has a quantum improvement in border security, in understanding the products moving in and out of your country, and protecting against cargo terrorism. It creates a huge new markets for all of the financial, insurance, and technology firms in the Euromed region, and it provides a way of establishing which firms have reached the new bar of operational efficiency. As this system goes into effect over a longer period of time in the Euromed region, by our calculations, we'll be able to increase trade in the Euromed region by something like 271 billion euros, and increase trade by 32 million containers, and create 20 million jobs, 14 in the developing countries, 6 million in the northern countries. What does all of this mean? And I want to come back to the financial institutions in the audience. What does all of this mean for financial institutions? Well, quite simply, by seamlessly integrating into a global economy, we see the opportunity to be part of a $5 trillion new market opportunity by 2020. What are the benefits that accrue to financial institutions? Well, they are many. First of all, participating in this kind of e-logistics system around the world will lower your financial risk at a time when risk is number one on the minds of regulators and CEOs. It will give you real-time ability to monitor in real time your transactions and reporting to eliminate fraud and abuse. It gives you a dynamic system for reporting exceptions that you want to put flags on. It will improve credit and transaction risk through dynamic analysis of both historic data and real-time data. We think it also enhances your competitive edge in the financial industry. It will reduce information and transaction costs, achieving revenue to expense ratios, we believe, of 3 to 1 or more. It gives you dynamic visibility of where your collateral is, something that's always on the minds of financial institutions. And it gives you a way to forecast when is your delivery going to occur, when are you going to see payment, and in the process, turn over your capital more quickly. We think it gives you a great opportunity as a financial institution to increase your wallet share. That is to say, you'll be able to provide a much richer suite of financial services to your trusted clients that you already have. And last, it's going to give you new financing opportunities. It will enlarge the number of financial service activities that you're engaged in, including such things as receiver and inventory financing. Well, last, let me talk about how Indonesian financial institutions can participate. We could also talk about insurance companies. We could talk about can participate. As I mentioned earlier, 3 Asian banks will be selected as gateways to the global logistics system. This will happen through a transparent RFL, request for license process, that will be triggered by the HumaWealth Genesis event in Geneva. Indonesian banks also have the opportunity to joint venture with other banks in Asia, with other banks in other parts of the world, to meet the technical requirements. And banks that may not feel they either have the interest or the capacity to be a gateway, they can still participate via the selected gateways. This I envision as something very much like a correspondent banking relationship. And in simple terms, I believe this is an extraordinary opportunity for Asian and Indonesian banks to provide real leadership at this moment of decision in our global economy to restoring the global financial system to soundness. Now, let me talk just a moment about the HumaWealth Genesis event. This is one of the events that's on the road to Geneva, but let me talk in particular about what will happen at Geneva. The HumaWealth Genesis event will be an important global trigger point for the GCEL initiative. And the Genesis event is planned to be co-convened by the Union of the Mediterranean, the World Trade Organization, UNCTAD, and the World Bank. We have already begun serious discussions with these global organizations, and just as His Excellency indicated, there are things that we are bringing to the table that are very consistent with their mission. This event is going to be attended by executives from the financial, insurance, and technology industries all around the world, in addition to many global leaders from governments, central banks, and other international organizations. At this event, we will launch the process by which the gateways are selected. And in that sense, the finance, insurance, and technology firms will compete for these exclusive licenses through this transparent RFL process that GCEL will oversee. And as I've already mentioned, in each region, there will be 3 technology, 3 finance, and 1 insurance gateway. We encourage joint ventures. We will be looking for firms that have global reach, that have significant technical capacity to be a gateway, but we very much want to encourage joint ventures. It may well be that there is an Indonesian bank that wants to partner with a Singapore bank, or a Japanese bank, or an Indian bank. We welcome that kind of joint venturing. We think it's very helpful. But at the end of the story, the criteria by which we will judge the final recipients of the licenses include the 3 that you see there, the bullet points: technical capacity, the ability to offset geopolitical and monopolistic concerns, and their reach in global trade. We all recognize that this is a global economy, and we will need gateways at the start who have that kind of reach. And upon the selection of the qualified gateways, GCEL will commence the deployment of the trade lanes, the 4 lanes that I've already mentioned, and that, my friends, is what we think begins to deliver the benefits. So, if you are a financial institution in Indonesia and you want to become more involved, what are the steps you should think about? First of all, attend the GCEL event in Geneva, the HumaWealth Genesis event with other industry leaders. Prepare for the RFL process. This is going to be a process that will take some time, but it's not too soon to begin. And we really believe that as you become part of this, that you'll be participating in the rebuilding of the global economy while at the same time providing real returns to your shareholders. Well, ladies and gentlemen, let me conclude by simply summarizing why GCEL is important to the global economy at this moment in time. We believe that GCEL's program, HumaWealth, will deliver some extremely valuable benefits to the global economy at precisely the time when those are so badly needed. Above all else, adopting this system will lower the cost of trade about 30%, saving the global economy nearly $700 billion a year, and cut the cost of producing many items as much as 15%, all at no cost to end users. We think this provides a perfect vehicle by which we can rebalance the global economy, whereby Indonesia can connect with Chinese markets, Indonesia can connect with Indian markets, and in the process become much less dependent on the 15% of the global economy that has created so much heartburn over the last 18 months. This innovation also presents a huge market opportunity to troubled industries like banking that really need new profits to put them back in sound financial position. For those countries that are early adopters of this system, we see enormous potential to trigger new investment. Imagine, if you will, if Indonesia can drop its cost of moving raw materials in and finished products out by 50 or 60%, imagine how much more attractive you become for investment. And we think this is a very appropriate time to introduce this system for countries just like Indonesia that represent the middle income countries where there is the greatest potential coming out of this financial crisis.